The economic impact payments, or stimulus checks as they've come to be known as, were one of the most hotly debated aspects of the COVID-19 relief package Congress agreed to earlier this week. When the CARES Act was passed back in March, qualifying individuals received $1,200 checks. That amount is down to $600 under the new Coronavirus Response and Relief Supplemental Appropriations Act. Numerous public officials have expressed their disappointment with the considerably lower amount of direct relief that will find its way into Americans' hands. Regardless, the money is coming and many potential recipients are confused as to whether or not they will receive it. Unfortunately, these rules are fairly complicated. Hopefully you won't need to call a tax lawyer to figure this out, but if you do, this is what they would tell you. First, it is important to understand how the payments are calculated. It is all based upon an individual's adjusted gross income. Your adjusted gross income is the sum of all the money you earn in a year, including wages, dividends, alimony, capital gains, interest income, royalties, rental income and retirement distributions minus any deductions that are specifically noted in Internal Revenue Code Section 62, which are as follows: trade and business deductions, reimbursed employee expenses, performing artist expenses, certain government official expenses, educator expenses, certain expenses for members of the armed forces, losses from the sale or exchange of property, deductions attributable to rents and royalties, deductions for life tenants and income beneficiaries of property, pension, profit sharing, and annuity plans of self-employed individuals, retirement savings, reforestation expenses, repayments of unemployment compensation, moving expenses, ARCH or MSAs, student loan interest, HSAs, certain attorney's fees, and charitable contributions. It should also be noted that borrowed monies should not be included in your income for the purpose of calculating adjusted gross income, even PPP loans. At this point it should be said that you are not expected to do anything to qualify to receive this payment. In all likelihood the IRS will simply look at your 2019 tax return, determine your adjusted gross income, determine how many dependent children you claimed, and compensate you accordingly. Should you wish to check your adjusted gross income, you can find it on IRS Form 1040 Line 8B. For those who are curious as to how these payment amounts are determined and how it will apply to you, the analysis below should provide some clarity. Individuals with an AGI of less than $75,000 and married couples filing jointly with a combined AGI of less than $150,000 will be eligible to receive the entire $600. However, that amount begins to phase out for individuals and couples with adjusted gross incomes greater than $75,000 per $150,000 respectively.